Part recorder. Welcome everybody. This is the Thursday evening Viper trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you are absolutely in the right place. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar. Other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody does know that you do trade on your own sole discretion. Alrighty then. Welcome everybody. Nice day out there today. Nice spring day, 81 degrees. Let's get some charts up and start talking about some trades. I really want to show. Stand by 1 second, please. I gotta log out of here. I gotta take care of one thing real quick. Oops. Tried to sign out of Skype there. Anyway, let me go back here. I really want to look at the Russell this morning. I really like the Russell. The Russell is a great instrument. I like trading the Russell. What I like about it is it's not quite as whippy as, say, YM or NASDAQ. I think they have less algorithms running against it. It tends to be a little bit smoother. Now you don't get the large volatility that you get with the other instruments, so it doesn't moves about half as much. But what it makes up for in smoothness is worth it. I really used to like YM. Let me show you the Russell chart here. But up until about, I'd say almost a month ago, YM did not have those algos running against it, you know. And now it's almost acting like NASDAQ. Yeah, you're right, Mindy. YM is almost becoming like NASI. It has these nasty deep retraces in trend moves. It gets choppy real bad for a while. When the algorithms kick in, they just push the market all over the place. You know, whereas I think the reason is that they're not running the algos against the Russell, is that the volume is much lower. Let's see if I can look at the volume and show you just real quick before we start looking at trade setups here. So you got to have some volume to push all those scripts, and you need good depth in the bid and ask, which I don't. You can't. It's not near as much as. Let me see if I get some numbers here to show you. Yeah, here. Let me show you. This is my hypothesis on why the Russell is what it is compared to the other instruments. Here's the equity. This is the CMEgroup.com site. If you've never been here, you want to check this out and bookmark it. This is sort of the Futures Central, if you will. Here's the equities right here. The big daddy on the block is, of course, the even ES&P contract. Almost 2 million going through there. That's heavily institutionally traded, massive algorithms. The reason we don't trade this in the room is because some days, in the old days, you only got like a big move on ES was like 6 ticks. You got big boys going in putting 10,000 contracts through and trying to get 2 ticks. So we kind of moved away from it. Here's NASI. That's the next dog on the block at 640,000 contracts. So that's pretty juicy, and the algos like that. Here's Weimer at about half of what NASI is, at about just under 300,000. Now all the way down here is the Russell. See, it's only got, for the entire day, including overnight, was only less than 140,000 contracts. So you're looking at 10% of the ES volume. Was this 20% of this, and only half of YM. So that's why I'm speculating that you're not getting, the kind of movement the pushing of the volatility and so it tends to be a little smoother. So let's look at this morning. Now, when you came into the morning, and I'm going to show you something that, particularly if you're new, that you really should look at doing to prep for the morning. Here we're coming into, okay, let me orient you here. Most of you know, of course, I'm here in California, so I'm on Pacific time frame, and so 6:30 is right here. This is the open of the equity markets. Now, if you were to set your Russell chart up this morning, just to lob out a question, make sure everybody's awake here this afternoon. What is the first thing that we need to do when we prep our charts as we get ready to trade? The numero uno thing that we're supposed to do. Anybody? Just go ahead and type it in the chat box. Well, aside from the what we're supposed to do, what do you actually do? You collectively, everybody here tonight. I know I do it every morning before I start trading. First thing, I look, my charts are all loaded up. Data connection's good. Got all my indicators all ready to go. I know what I'm going to trade. I know how I'm going to trade it. Support and resistance lines. Good, 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 good. Most excellent. Now, here's the thing. If you haven't done this before, it's really simple. You just take a line like this, and you put it down where support is located. Now, you're going to notice here that some of the swings are going to go a little bit above it. Some are going to be a little bit below it. Some are going to come right to it. So you want to find an area where you have sort of a preponderance of candles that are sort of touching and wicking up into the same area. That's called your support line. That's the first thing you do. Number two, you put your resistance lines in. In this case here, I see resistance pretty much up in this area right here. So you're looking at 22 to, I don't know, 25.50. So that's about a 30 tick range, plus or minus 30 ticks, roughly. Now, just to be clear about this, as long as we will remain within this range, this opening range coming into the pre-market session, getting ready to trade the equities. Can you hold on 1 second, please? Good Lord. Testing audio visual. Testing audio visual. Can anybody hear me? I think I got disconnected for a moment there. My apologies. Am I back up? Alrighty then. Cool. Okay, anyway, back to this. All right, so it's really important that you do this, okay? And so what I'm trying to say is, I've said this 100 times before, but maybe more than that, is it's healthy to think of these support resistance areas as sort of regions. They're areas. You know, we say, well, support's at 2170 and resistance is up at 2550, but really, realistically, it's an area. So you're going to see that the market's going to poke through it a little bit. Market's going to go under it a little bit. And that's how that's going to go. Now, I'm going to advance the chart in real time from the open, and you tell me when you think we've broken out of the range and are now in a trending mood, in a trending move. You're going to type in the letter B to signify that you believe we have broken out of this range. Okay? I'm going to help you. This is really important you do this exercise. Let's do it together. Ready? Now, when you think it's broken out, you type in the letter B. Okay, here we go. All right, here's the open of the market. And we're going along. We're going along. Here's 638. Stand by. Going along at 6:44. We're 14 minutes into the trading session. 6:47, 17 minutes into the trading session. $6.55. We've been open. Market's been open for 25 minutes. Okay. All right. So now we're coming up right on 7 a.m. Pacific. Seven a.m. Pacific. There's 7:03. There's 7:09. I can't remember. There was some news today at 7. Wasn't it home sales or something like that? Okay, there's 7:13. Market's been open about 43 minutes, roughly. Okay, 7:15, 45 minutes, market open. Okay, 7:22 a.m. Pacific time. $7.29, coming up almost on 7:30. All right, I'm going to stop it right there. All right, good. Now, let's go back. Some of you typed in B's at various areas. By the way, if you're just coming in, don't worry. We're recording all this. As I see some people coming in late. Don't worry. We're still kind of working through the first parts of the webinar here. We got a lot more to cover, so don't worry about it. But so when I said area, let's go back. Let's go back here. Some of you typed in a B as early as here. And I can see why you did that. In fact, I intentionally did this exercise for that purpose. Now, let me ask you a question. In the case where you get a thrust, as right here, and we change the background to green, the bars are blue and we stair step up, and you believe that we are breaking out to the upside, what needs to happen to confirm it? In order for this to be a legitimate long trade to the upside, and for you to convince me and everybody else here tonight that this is a legitimate breakout, that we're now in an uptrend and you should be buying the market, what should happen after this happens right here? What should be next to compel us to actually trade it? Good. Good. All right, let me tell you what people are saying. Comes back, you get a pullback, and it finds a higher level to retest support and then resumption of the move. Now, did we get that? Yes or no? Here's the pullback. It tries to find support in here. Can't get back to the top and certainly can't break it. And then it goes right back in the soup down to the bottom. How many of you get sucked into these little head fakes and start losing money right out of the gate like that? 4, 5, 6 minutes into the open, you think this is a long trade, you get sucked into it, and next thing you know, you're upside down right out of the gate. Show of hands. I won't mention your name. Don't feel guilty. I used to do that all the time. Show of hands. Me. I used to. That used to happen to me. I did. Don't do this. We're gonna look at lots of instances where you get good moves. Don't. I think there's that, what do they call it, FOMO, fear of missing out. Everybody's on the impression that you got to trade like that first 5 to 10 minutes. There's going to be a huge move of the day is going to be in the first 5-10 minutes, and you're going to miss it. A lot of time these are head fakes. These are jerking you around head fakes. They're running stops. They're taking out buy orders, and then they flush the toilet and cash the money. Yep. Don't allow yourself to get tricked. In the case here, if you'd been patient enough to draw a box right here thinking it was going to get long, you never got filled. Okay? You never got filled. We can see here a couple of you typed in some B's when you saw these areas right here. Now we know, based on what we see here, that this is not the case, because what did we say over here? Support is an area, not a line. This is probably the hardest thing to learn as you start doing these support resistance lines, especially at the open. That is much harder to deal with. I don't think anybody typed in anything over here. The concept of area worked well. By the way, I'm not disparaging this range. This range was like 30, 35 tick. This is actually a tradable range. You had trades in here. This could have been a short down to here. This could have been a short down to here. Here you had a little short. Here you popped up. You could have been buying support and taking coin up here and shorting up here. This is a very tradable range. Now, many of you typed in a B when we got over here. Now, looking back on it, was it a legitimate break? Yes or no? No, I wouldn't adjust the lines. Who typed that in? Lewis? I would personally not adjust the lines. I mean, you can shuffle them up a little bit up and down if you want to. You could say, for instance, this line, if you want to sort of engulf that area now, if you want to sort of push this up a little bit like that. Yeah, absolutely. You can. They're not chiseled into granite. You can move them around a little bit. Absolutely, no problem. Yeah. If you feel that the range needs adjustment a little bit. Well, now looking back, everybody who typed in the beef there, we can see clearly, very much like this area, only to the downside. Here we got the push. Here we come back to the mid band. And do we get follow through? Here's the retest. And much like this one this never happened, so we never got confirmation. And this never happened, so we never got confirmation there. So this was another fake out to the downside. Depending on if you had drawn a box here and tried to take a short, it might have sucked you into a quick short. We know that when it doesn't go in your favor, we said it 100 many times. You just get out of this one, hit the close button and get out of it. It's not moving in your favor. Bam, you just get out. Maybe get hit by a couple of 4 or 5 ticks on, maybe get out on that bar right there. Okay, no B's here. No B's here. No B's here. Still in the range. Now, granted, look, it's hard to sit there for 45 minutes and watch this thing ping around like this, especially if you're not a range-bound trader and you don't like trading ranges. You kind of almost have to sit on your hands unless you can do it, practice in sim and try to learn how to trade ranges. That's a worthy goal. Turn on your sim and practice in here and see if you can learn how to make money in the range. Okay, now let's keep going here. Now here's 725. Pops up here. Here's another pop-up. Let me continue to advance the chart. Here, I'm going to get to put this line just a little lower so it doesn't get in our way. We all know where it is. Now, can anybody tell me what's different about this instance right here? By the way, and some of you typed in a B, right, when this was forming. What's different between this price action that's happening right here and the head fake here and the head fake here? What is happening here? There, right there. Here, I'll keep going. How about here? We got follow through. It held the higher level of support. It held more or less what was the what was the essence of the support resistance range was now providing support, which had previously been actually the line, of course, everybody knows right up here. I dragged it down, but more or less right up in here. This breakout level is holding, and it sat there for like 8 minutes. This is holding. This is a legitimate breakout, and what confirms it is this price action right here. So here's the just to be clear, here's the retrace into support, and it holds. I believe we called a long here. I'm trying to remember. Does anybody remember in the room? We said to box that and look for the long side. I think I actually took that trade. I'm trying to remember. Yeah, we did. Yeah, we did. All right, now let's continue on. Now we see that we have legitimately broken out from our range. It's going on 730. We may or may not have caught this box right here. Maybe you did, maybe you didn't. It's hard to say. But let's look to see if there's a... Yeah, I did take that. I think I did take that, Jim. You're right. Now let's do this. I'm going to advance the chart some more, and we're going to pretend that we're kind of looking at this in real time, recreating it from this morning. And then when you think you see another trade, and I'll help you out, it's going to be a long. When you think you see another trade, you type in the letter T. Okay? We've broken out to the upside. We're looking for longs. Okay, now I'm going to start to advance the chart. Here we go. Don't type in a T here because this is the trade that you should already be in. But let's say you didn't get that one. So here we go. Okay, 734, coming up on 735, 736, 739. Turned out to be a nice trade there, didn't it? 742. Beautiful long trade, wasn't it? Remember, when you think you see a trade, you're going to type in a T. Okay, let me blow the chart up a little bit here. Try to make these bars a little bit bigger so you can see them. There we go. Okay. Make the bars even bigger, help you out a little bit here. There, you should see the bars real good now. Okay. Okay, now we're at 749, coming up on 750. All right, let me stop it there. Now we had some good participation and we had some areas we need to work on. So let's address each one. There was a small handful of you that typed in a T, I think somewhere when it was up, I think maybe like up in here somewhere. I can't remember exactly where it was, but I saw a couple T's come in up in here. And I think, you know, it might have been here. And so that would definitely be a negatory on that one because you're still in the thrust move here. Now, if you, some of you I think typed in a T when this happened right here. And I think you could make a case. Our rule of thumb is that you have to have it break the stealth line and the nearest line. In the case of the short, that would be line 2. In the case of the long, it would be line 6. So you could make the case you had adequate retracement to take a long here, and I would agree. Now, just to be clear, you're not taking it here at the apex of the thrust. You have to wait for the pullback. We all know that, right? Not at the apex of the thrust, but on the retracement. Okay, nobody typed in a T up here. Nobody typed in a T up here. You can obviously see we got a double top at 32.20. Now, some of you, I want to blow this area up and be real clear about this. Okay, here's our sort of 1, 2, 3 bar rule coming into play that we talked about before. Okay, I'm not even going to draw a box. I'm going to ask a question. In your opinion, was the entry long on this bar right here? Or should the entry long have been on this bar right here? This is A, choice A. This is choice B. A, should your long entry have been on the close of the A bar, which is right here? Okay, we're getting long, everybody knows that. Or was the appropriate entry, in your opinion, on the close of bar B right here? So what this comes down to, and let's analyze this a little bit in detail, because I know this is a challenging area for some traders, for some of you in here. If you had drawn a much more aggressive box that looks something like this, and activated the long side only, then yes, in fact, you would have been filled on the close of that bar there. There are 3 bars inside of here, so that's a legitimate box. Now, if you had a little bit slightly larger box that look more like this, and depending on how you drew it, it's possible depending if you had engulfed the wick of that candle and this closed out of it, you could have been filled here on A bar. Definitely, if you had it larger like that, you would have been filled on B bar. So, in this case, it really depended on how quickly this happened and how quickly you were able to get in. You could have put a buy limit order in here and been filled. You could have hit market order to jump in if you didn't have time for a box. There's all different ways to get in. You could have used the ray tool, drawn a ray down here like this, and when it broke up, you got filled in the B bar. Yeah, B's okay. Both A and B are perfectly acceptable. You're getting long in there, right? You're getting long off that bounce. And if you had tighter box, you get in faster, looser box. And that doesn't hurt you either. All right, so let's see what this long trade turned out to do. All right, let me advance the chart a little bit so you can see what's going on. Now, what I like about this particular price action here is and I really want to show this in detail, and this kind of movement should make you really happy as a trader. Whether you got in or the A or B bar, it doesn't matter. You're long, and can you see how you poked up, and then you get this a lot of times. You get a little pullback in a challenge to here. See? A couple of 3, 4 bars come back, checks that little breakout area from the box, just wicks it, pushes up, breaks the top by 2 ticks, and then you start to go sideways a little bit, and then she just starts to take off. She takes off like a little bird. Beautiful trade here. That trade alone got you, say, 30, 50 up to 35, 30 ticks. This tick here, this trade here, I might have gotten this little retracement here. Maybe you got 15 ticks on that one. This one here was killer. If you caught the early one, you got in at 25.70 maybe, and maybe you stopped out up here somewhere. So this would have been probably 20 ticks, 20, 25 ticks, long trade, 15 ticks, and then this little pop here was closer to 30 ticks. Okay? Yeah. Yeah, got all the way to 36. Stop would have been right in here. Came down, took it out. All right, any questions on that? I'm going to keep advancing this. Market speed dictates what you could take there. Yeah, obviously, if you're watching this trade and you want to get in, if you're hearing calls in the room, hey, get ready to box or take that long at this support level, at the mid-band, and you don't have time, sometimes you just got to hit a market order, put a limit order in there and get filled. Yes, I did take that long. I think I stopped out of these earlier trades and I re-entered right here. Yes, that's true. I did take that. Okay. All right. Now I'm going to do one more of these on the Russell, and we're going to do the same exercise. You're going to type in a T when you think you see the next long trade. Okay, here we go. Now we're getting long in the tooth here. This is 8 o'clock. This is right about when the room was closing, so you would have had to kind of take this one on your own. Here we go. Remember, you're typing in a T when you see a trade. Blow this up even more so the bars are even bigger. Okay, now we're at 8:03. I can't remember if the room was still open. It's right about the time that the room closes. So you're at 8:03 a.m. Pacific time. Remember, you're typing in a T where you see you're taking a long trade here. Remember, that's the exercise here. All right, I'm going to stop it right there. Okay, let's analyze this trade setup from a couple of different perspectives. What needs to happen on these retraces as you learn how to trade them is that the market needs to, in the case of an uptrend, it has to find some kind of support. And you can see by this little collection of candles right in here that you are finding support. It was right just under 33. This was a profit taking from this big run. For everybody who was long from lower levels was taking profit up here. That's why you get these pullbacks, right? Some of you typed in a T here as these bars were forming right here. And that was an most excellent box to take, and you would have been filled long on this bar right here. I would categorize those of you who typed in a T here as the how would you say, early adopters. In other words, you've developed a pretty good keen eye and skill set to see when a market is at support or resistance early, so that you quickly can box it in and get in as early as possible. Now, that being said, we have another sort of box that formed right here, and some of you typed in a T when these bars formed, and that was perfectly acceptable. You're a little bit later adopters, but you still saw that that was a legitimate box trade long at the mid-band. In that case, you would have been filled long on the close of this bar right here. So you can see that you're in a little bit later, but you're still in the trade long, and that was a legitimate trade. Now, with that being said, some of you didn't type in a T until here, and a couple of you typed in T's all the way up here. These are a big negatory. That's a big no-no right there. That's a no-no. All right? What you have to do, if you aren't getting in until the market is all the way up here, you have to do market replay and watch the market scroll back and forth, recreate these trades so you develop that keen eye to see the setup early. It comes down, it finds a support level, you get 3, 4, 5 bars forming a nice box. You try to get in down here, you get filled, you miss it, you see another opportunity. You take the second box here if you miss this, but you really want to work on seeing that first box. Same thing over here. You want to become an early adopter, okay? When you start to see a good level of support being put in an uptrend, you want to go in and take that trade. You need to get a little more aggressive. Some of you over here on this first one typed in T's all the way up here. I forgot to mention that. This is a big negatory. By the time the market gets up here to resistance, we're already taking profits from the box that was here. So you can't be getting in there. That's not proper entry. You need to work on developing that keen eye to see the early entry. That's the key to your success. Right there. Likewise over here. On this retracement just under the mid-band. All right, I see some questions. Robert, you can just hit buy. That's what I said. There's multiple ways to get in you can right click, put a buy limit order in here. You're filled as that bar forms and closes. You're long. You can use a region box from Object Trader. You could draw, use the Ray tool or line trader. You're long on that bar too. You could draw another box right here. You're long on the close of that one. You could hit market order in here to get in, put your stop in. There's all manner of ways to take the trade. The key is that you're getting long and you're seeing where to get in. It's the little yellow bars that sit on the midband that bite me. Well, that's the thing to work on there, Mindy. Unfortunately, if we could script this thing out, it would be nice to say, you know what? Okay, every time you pull back, I want you to form nice yellow bars that sit right here on the midband in a nice pattern. Give me plenty of time to draw a box, because I need time to think about it. Don't go too deep and don't go too shallow. Come to right where I want to get in. But we all know that's not, that's not reality. Markets don't do that. They go deeper, especially YM and NASDAQ. They come a little higher. They shoot up more than you think. They pull back more than you think, and you just have to adjust on the fly. All right, let's do a couple more before we wrap. I want to do a trend change here. I'm gonna move forward off of this last long trade here on the Russell. Yeah, but one last thing. This before we do the trend change thing. Lewis is saying that visually he gets challenged in trades like this because the bars have turned red and you're underneath the midband. I can understand that. We hear that all the time. We have to realize that just because the bars have turned red does not obviously mean that there's a trend change. It's just trying to find support. And sometimes when you come below the midband, the bars are yellow. Sometimes they turn red. In actuality, as far as the price action itself, the colors of the bars are really not material to actually taking the trade itself. The price action, the box, the entry level is really much more important than color. I'm not saying to ignore them. It's helpful visually, especially when you're in a trend, and the bars are blue and it's up. But as far as getting a little scared that that's a trend change, yeah, you got to try to work around that. Yeah, there's two entries I showed here, Brian. It was the close of this bar here if you had the more aggressive box, just under the midband, and then the secondary entry was on the close here with another box sitting right on the midband. Yeah. All right, so I'm going to go ahead and advance this chart. Now, I want you to type in TC when you think that the trend has changed. Okay? Let's do this exercise together. You type in TC for trend change when you think that the trend on this market has changed. You don't have to say it's changed to what, because we know the market can change from up to sideways, right? It can change from down to sideways. You go from up to down and down to up. So there's 4 different ways it can change. Ready? Let's do this together. All right. Okay, now we're at 8:10. So the room is closed. You're on your own. And you say, okay, you know what, Charles, I'm going to keep watching Russell, and I'm going to see if anything else sets up. Let's go ahead and keep trading here. Remember, when you think the trend has changed, you type in TC. Okay? Keep going. Here we're at 8:14. The room's closed. You're on your own. All right, I'm going to stop it right there. Yeah, some of different times came in. Now, let me help you with this. What were some of the breadcrumb clues that we were handed that helped us to determine that the trend had changed? Let's break it down. If the trend was going to continue up, would you not agree that this pause, I'm going to show you a couple of pauses to look at here, here, and here. Unlike the other times that it pulled back here, you did not get follow through to the upside from any of these places here. Breadcrumb clue number one to trend change possibility. Number two, and this is where some of you typed in, you know, and if the room was still open here, and I think it was closed, you know, we would have been, you might have heard something to the effect of, look at the Russell, it's getting lower highs. The Russell can't get back to the top. Russell is sitting on the mid-band, but it's not bouncing. Now look right here. See this prior support level here? See how it's broken? Some of you typed in TC right here. Now I would say that's pretty aggressive. However, it did break it and hold it and stayed below it and then came back up and tried to check it, and then you had a secondary support level right here that it broke, and it came up and checked that too. Some of you typed in trend change here, and many of you typed in trend change down here. And actually, with these little kisses up in here as it broke stealth in line 2, this was actually potential short entry trades for you right here. You know, depending on how aggressively you drew the box, you could even filled onto one of these 3 bars right here short. Yeah, so this is the kind of thing that you really sort of, as you do your market replay and you watch your chosen market, you really have to develop an eye for noticing these little subtle things that happen. Hey, wait a minute. Okay, I didn't go up here. Okay, we came back to the mid-band. We couldn't even get back to here. This market's looking weak. Might be breaking down on us. So maybe I should be looking at some shorts. And then when it takes out this support, and we turn the background red, and the mid-band starts stair-stepping down, now we have some confirmation. You come up, you kiss resistance, resistance, resistance. Some of you might have been waiting if you traded this after at 8 o'clock for a pullback up to here, which you never got, and then it just fell off the map. How many of you have developed the eye to be able to see these breadcrumbs that I'm talking about, where you get the retracements to get in? Just type in a yes or a show of hands. Have you been able to develop that eye? See those entries to see that trend change? Because next week I'm going to spend some time going through trend changes. Now, some of you are some of you are at 80%. I'm developing the eye. I'm working on it. I'm getting there. Sometimes yes, sometimes no. This is really what I'm showing here. Instrument selection is really key to this right here. What I'm showing, the depth of retracements, how clean the trend changes are. I'm not going to keep hearkening back to YM. Gold's another one to look at. Crude oil sometimes is another good one to look at. Sometimes it really respects support and swing areas with the entries. You got to find an instrument and fall in love with it, and then trade it every day. And these are the critical things that you need to look for. All right, let's do one more trade here on the short side. And I'm going to advance the chart, pretending that you're on your own and you're trading it after the room closes. You know you're looking for shorts. The background is red. We're stair-stepping down. We know that trend has changed to down. And let's say hypothetically you did not take this trade right here. For whatever reason you didn't see it, you didn't miss, so you missed this one. All right. So now you're looking to you're looking for shorts. Okay. Now you're going to type in a T when you think the short entry sets up. Here we go. Type in a T. We know it's short. You don't have to type in short. We know it's short. Right now you're at 819. You're not in this one. You're looking to get in. So it comes all the way down. There's 820. You're watching it. 821. 826. Blow the chart up a little bit here. 827. 828. Okay. 8:29. Market's been up here for about 2-3 minutes now. Okay, there's plenty of time to sort of think about what you want to do. There's 8:30. There's 8:31. All right, let me stop it right there. Okay, this is more or less a reinforcement. I hate to keep doing this exercise, but you have to understand the importance of what we're doing here. I cannot overemphasize how important this is. This is the key to your success in trading. What we are doing in these exercises is tantamount to your making money. That's really what this comes down to. Some of you typed in a T when these bars formed right here, and I would say yes. This was definitely a box setup right here that formed at 8:27, between 8:26 and 8:27. Now notice, there was never a bar that closed down outside of here, so this box, I keep drawing a silly thing. I'm trying to draw this one right here. Notice there was no bar closed down out of here, so you never got short. Now, in the case where this happens, where it pauses right at the midband and forms this little box, but there's no close down to get you short, what can you do right here as these bars formed? That's right. Rebox it. Rebox it. That's right. You simply move this box up here and reposition it. Okay, you never got short out of this box. This was a legitimate. If you typed in a T here, you were correct. Yes, that isn't a legitimate box. However, it did not fill. Many of you typed in a T as this box formed right here. Good. And you would have been filled short on either this bar if you had it tight and it broke the midband and closed, or you would definitely have been filled on the close of this bar right here. Short. Now, here again, I'm not going to name names. Many of you typed in T's when you saw these bars here. This is a big negatory. I can't overemphasize. If you're getting in markets after they've moved, the retracement has set up a legitimate trade. It's coming down to support where scalpers are getting out, and you're getting in 15 ticks too late. You got to work on your trade entries. If you're calling a T down here, you're missing the boat. You really got to work on it. Okay? I'm not scolding anybody here. Yeah, you could do a market order. If you could put right click, you could put a buy limit, sell limit order in here. You would have been filled, in here. You could do a market short on that bar right there, market entry. You could have drawn a line or array up here. You could have drawn the region box from Object Trader. By hook or by crook, you're short here, right in here. All right, want to show hands here before we do another trade and get ready to wrap. How many of you are going to start doing these market replay exercises just like we do in these webinars? Is anybody going to start doing this? Do you see how critical seeing these trades is now? You see how critical that is? It's really important, huh? And do these exercises where you look at the range, the opening ranges, and you work around not getting these head fakes, right? You don't want to get in the hole in the first half an hour. You really want to try to avoid that. You got to be patient. You have to realize that there's plenty of time in a trading session for market moves, okay? Tons of time. Be patient with yourself. Lock your hands down for the first 25 minutes and say, okay, I'm not taking anything until I see a move that I want. Right? I'm going to wait for the perfect setup. I am a mid-band trader, and I'm going to wait for that mid-band trade, and I'm going to take it. Now, you might only get 1 or 2, 3 trades in the morning, right? But we all talked about this before. It's not the quantity of trades. It's the quality of the trades that you're taking, right? Hold on, let me get this chart. It's not the quantity. It's the quality. If you take 2 trades and you make 40 ticks, how do you make more money? You leverage up with more contracts. It's literally that simple. Let me get this chart organized one more time. I want to look at one more trade before we wrap here, before we run out of time. Hold on. Chart getting a little wonky on me here. Please, 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 a million times, please. If you got 15 minutes spare time in a day where you can just pull your charts aside, try to do this exercise where you literally go back and forth and you try to recreate the morning and you look back and you say, okay, I see that was a trade. I see that was a short. I see that was a long. I see it all. I see I was in a range. I should have stayed out of that. I got a little beat up there. All right, I'm going to do two more real quick. I'm going to erase everything off the chart. I'm going to do one last exercise, and then we're going to wrap. I'm going to clean the chart off. I'm going to do two trades. I'm going to help you. They're long. Yeah, you got to practice. In Sim, go into Sim, Dennis, and practice if you can. Do it. Do a market replay. Look for your setups that you're looking for. Practice using Object Trader. There's two T's, and I'm going to help you. They're going to be long trades because we're in an uptrend on the Russell that came later in the morning, and I'm going to move this pretty quickly. You're going to be two T's you're going to type in for two long trades. Ready? Here we go. You tell me when the long trade sets up and you're ready to take it. Here we go. Trend is up. Two long trades setting up. You're going to type in, I'm going to just advance it through T1 and T2. Here we go. Do it fairly quickly because sometimes that market moves quick. And 10:48, 10:55 a.m. Pacific time. 11 o'clock. There's 11 o'clock. 11:02. Okay, that's it. No. You're too late. Some of you got the gold star. Okay. Here was trade number one. Long trade number one was right there. It came. Bip right down in here at 10:39 Pacific. Wick just above the midband. Textbook little box. Limit, buy, market order. However you got in, by hook or by crook, you're long on the close of one of these bars right here. Nice textbook long trade. Perfect. Many of you for trade two typed in T when this box was forming right here. Yellow bar is right at the midband. It doesn't get any better than that. If you were going to Wikipedia and look up retracement trade long at the midband, it would look just like that right there. This is what Wikipedia picture would look just like that. And then some of you, and here again, I'm not scolding, didn't type in T's until all the way up here. Obviously, you're missing it. You got to practice looking for those box entries. Please, a million times, please commit to yourself, the team, everybody, to me that you're going to do that. That is a wrap. I'm going to stop the recorder.